My crypto investing strategy is pretty boring, but it's been making me over $100,000 a month since 2023. And the investing process that I follow is pretty simple. I can pretty much do the entire system with only 5 hours a week. And no, the strategy I'm implementing is not some basic dollar cost average strategy that everyone likes to talk about. The strategy that I am implementing, I built over 7 years of being a crypto investor, and it is a unique edge that I have come to refine over that period of time. Now, I've invested thousands of hours alongside my team of 2 full-time developers to build this system. And today I'm going to give it to you completely for free so that you can actually go off today and actually implement this system yourself without really needing anything else beyond what I'm going to tell you in this video. So let's get started. Now, before I break down the strategy, I just want to give you guys proof that what I'm saying is legit. This is my Ledger account. You can see here. This is my main wallet. I started it in April 2023 with $250,000. It's now at 5.8 million, just hit a new all-time high this week. I've just been making pretty much consistently over $100,000 a month doing very minimal long-term investing. And it's honestly pretty straightforward to make consistent money in crypto if you have a really good long-term strategy. The first step that you want to think about when long-term investing, and the first thing that I do to make $100,000 a month doing basically nothing, is you have to build a portfolio. Before you figure out when you're going to buy, you've got to know what you're buying. I would say that you should only buy 2 types of coins in crypto. You should buy Bitcoin or coins that can triple the gains of Bitcoin. If you hold a coin and it's only going to go up an extra 50%, 100% against Bitcoin, it's just not worth it, because Bitcoin as an asset has been and will continue to trend up like this, making new all-time highs over time. Your average altcoin, 99% of them, this is their long-term performance. The first bull run, they do great, and then they sort of go shit, and then they never make a new all-time high. If you're long-term investing, that means you're holding something for probably multiple years. Why would you long-term invest into an altcoin when 99% of them are just going to make consistent lower lows and they're never going to make a new all-time high after their first cycle? It doesn't really make sense. So altcoins are incredibly risky from this perspective for the long-term investor. And so you should only buy an altcoin if you can make so much more money from it that it sort of makes the risk worthwhile, if that makes sense. Because your biggest edge as an investor is your ability to make money from time in the market. When people say, oh, long-term investing is easy, it is easy because all you have to do is just do nothing. Buy and do nothing. Think about who are the best investors in the world. It's dead people. Dead people because they don't do anything. They just hold Tesla stock and they don't do anything. They just wait 10 years because they're dead. The more active you become as an investor, the more likely you're going to fuck it up. So for most people, they're better off just having time in the market. And Bitcoin is an asset, as it's making all-time highs every few years, that time in the market will eventually make you money because it is making new all-time highs consistently. Altcoins, you cannot say the same thing. Time in the market is actually your worst enemy in the altcoin space. The longer you hold a token, an altcoin, the more likely you actually lose money. It's the inverse. The longer you hold a Bitcoin, the more likely you are to make money. The longer you hold an altcoin, the more likely you are to lose. It's flipped. So if you're going to take the risk of buying an alt, it better be able to make massive gains, or there's just no reason taking on that additional risk. For example, Solana is at the same level against Bitcoin that it was 500 days ago. That means that if you bought Solana 500 days ago to try to outperform Bitcoin, you didn't. Most people who bought Solana would have actually made more money buying Bitcoin, which is just a crazy thing to think about. If you bought Solana here and it's now worth that against Bitcoin, you actually made more taking on less risk buying Bitcoin. It's just a bit of a crazy concept, but people take a while to wrap their head around it. In fact, I held Solana a year ago. And you might say, well, Daniel, you held Solana a year ago. You know, a year ago, you were making 100K a month just like you are now. The thing you were doing that you don't do anymore was making you money. Well, yeah, that's true to a certain extent, but I make more money just holding Bitcoin than I would holding Solana. You make more money. It's not like the strategy is different, so you don't know if it works. I've made a change and it's actually more profitable. So with your portfolio, to make 100K a month, you have to be strategic and you need to think things through like this. What are you going to hold? So what's my current portfolio? My current portfolio is Bitcoin, Tesla. These are my sort of big blue chip long-term holds. And then we've got Newt and Abstar. These are my 100x plays, essentially. And just something for you guys to think about, Bitcoin is the easiest asset to buy bottoms of as a long-term investor because it's just continually making new all-time highs. Eventually, you'll make money. Right now, the only coin that I use this long-term strategy on is Bitcoin. That's just what I'm going to focus on in this video. But you can actually use the strategy I'm going to teach you on altcoins. So you can use, if you want to buy Solana, if you really want to, you can use the strategy that I'm going to teach you on it. You can use it on most coins in crypto. So how do I make 100K a month? What am I doing on a day-to-day basis? Every day, I spend about 10 to 15 minutes going through my daily market checklist. The way that I sort of would describe this to you is it's like in a battlefield having a sonar radar to have an understanding of where your enemies are and where your other ships are. If you're not getting a read of where your enemy is, you're not going to have any idea of how to beat them. And it's the same thing. The daily market checklist allows you to have a consistent insight into where the market is and what it's doing. The more pings you can do, the more you can check it, the better, okay? What you want to do is you basically want to build a comprehensive checklist that covers derivatives data, market sentiment, on-chain data, order book analysis, options data, and price action. Now, you probably just read that and were like, oh my God, how am I going to do that, Daniel? That's like a lot of shit. Well, yeah, it is, but I'm going to give you all the stuff that I currently look at to do my daily market checklist. So you actually don't have to do any thinking. So this is my top 9, and we're going to run through it right now. The global funding rates is basically on CoinGlass. You just go to the website, funding rate, press this one. The idea of this is it gives you the macro picture of what traders are doing. When traders are bearish, you'll see a lot of green. When traders are bullish, you're going to see a lot of red. When they're neutral, you're going to see a lot of white. If you wanting to buy, you want to see a lot of red. If you're looking to sell, you want to see a lot of green. So right now, Bitcoin's at all-time highs, and there's actually quite a bit of green. That is telling me that the market has room to run. So I would not be looking to sell here, essentially. Now, the funding rate heat map is the sort of same data as what I've just shown you there, but it's just visualized a little bit differently to sort of help you see exactly what we're trying to gouge from the market. So you can see here, it's just basically a heat map with different colors. Red is the bearish period. This is where you want to be looking to sell. That's the main reason you use this. You're trying to spot the market being overheated. So you can see here, red is like the overheated period. You should start looking and being careful. Red, overheated period. And it just gives you an overview of what's happening. Now, the next one that I look at in my 10 to 15 minute daily checklist is the premium index. Again, similar to the other data, but it's just a different visualization, premium index. So this one is just the funding data visualized a little bit differently. You can see here, this is when the market's overvalued. Now, you don't just see green spikes and sell. Again, it's just sort of a macro picture for you to understand. You can see the prior tops, there's a lot of green. A lot of green gives you the macro picture. The next thing I look at is the bid-ask depth. So basically, you come to this website called beta.materialindicators.com. You go to the fire charts, you press the 1 year time frame, you grab this and go to 3, and you go to 97. And basically, it's just showing you where the bids and where the asks are. When you are looking to buy a bottom, you want to see a lot of white below the price, because the white, as you can see here, is the largest quantity of bids. So that's obviously where the price would bottom, because that's where the most amount of people are trying to buy. You can see that if everyone wants to buy at 75K, they're not going to get to, because the price will bottom before that. So this is just to give you an overview of where the market currently is. You can see here that we're hitting some resistance. We're probably going to consolidate for a bit. Maybe we just blast straight through, who knows. The next one I check is the Hunter algorithm. So this is one that I actually designed in 2021 and I've been using ever since. It's basically a signal-based system that derives signals from the data that we just looked at. So I just showed you all the different funding datas. We take that data and we put it into this system and it gives us signals, okay? I basically check this every day just to see what's happening. You can see here that it's been pretty accurate. Bought the bottom here, bought this range, this range, this range, which is the bottom. These signals are a bit clunky, but you can see it bought the bottom again here. And all these signals are actually in profit right now. The next one I look at is relative strength index. All I'm trying to do is spot divergences on the 4-hour and the 1-day time frame. So if I go to the 4-hour time frame and I look at the recent bottom that we had here, you can see that we actually had a divergence forming. You can see here roughly that there's like a little bit of a divergence, okay? It's not the best divergence that you've ever seen, but this is what you're sort of trying to look for with the relative strength index. You want to see some sort of divergence forming. Lower lows, but higher highs in the strength of the market, okay? Binance basis is the next one. So this is the difference between the spot price and the derivatives price on the Binance exchange. So this one here, let's get rid of Hunter Algo. Sorry, it's a bit of a mess. Let's go to the daily time frame. When the spot price is above the derivatives price, it goes below this green checkered line, whatever you want to call that. You get a green flash. You know, you don't necessarily buy every green flash, but you can see it's been pretty accurate at dictating like where is a time to be like paying attention and potentially buying in the market. You can see it caught that bottom, this bottom here, and it didn't work super well on the recent one. The idea is that you want to check the basis to get an idea of like how bullish the market is. And you can see here, it's also good for picking tops. It sold the top here, said to sell there, and also over here. So you can see it's just like giving you a general broad picture on the market. Retracement from prior high is pretty straightforward. It's basically just looking at how far price has gone down. So you can see I've already plotted here that Bitcoin tends to retrace 20 to 30%. If Bitcoin's down 30% from the high, then then it's probably a region worth considering buying, right? We dropped 30% here, bottom, just like last time, 31%, 31%, it's just repeating. High time frame support and resistance. I mean, this is pretty simple. It's just drawing lines on a chart like that, just like this, just to give you like an idea of like where the support is, where the resistance is. So that's my checklist. That's what I look at every single day for about 10, 15 minutes to make $100,000 a month from my long-term investing strategy. And that's step 2 of what we're going to be doing and what you are going to be following in order to get the similar results as me. The goal of the checklist is to basically wait for the data sets to show that the market is near the bottom or near the top. Now, if you'd like access to this checklist and the links to all the different websites, I'm going to put it in the description below. Now, just the mental model for the daily checks, like I was describing, most people know where the bottoms were. They know where they should have bought, but they just didn't focus enough time to stick their head out of the noise of panic at the bottom. Like, because what happens is the market's near a bottom, you see all this panic online, it distracts you, it confuses you, and then price pumps and you're like, I knew it was a bottom. The daily check allows you to sort of see in advance, okay, we're getting near a bottom, near a bottom, near a bottom, near a bottom. Oh, I probably should buy, okay? Another way to view it is the market is like a living, breathing entity. So the closer that you study it, the more you're going to feel connected to it, and the better you'll understand why it moves the way it does. Like anything in life, the more time and energy and focus you spend on something, the better you're going to be at it. It's the same thing with this. The more you check in the market, the better the read you're going to get of the market. Bottoms are not hard to buy. The hard part is just being patient, waiting for them. The reason why bottoms are easy to buy is also described in this tweet. Bottoms anchor to tangible fundamentals like production costs. They create a measurable economic floor which can be quantified, tracked, and validated across cycles. That's math. Tops, by contrast, are inherently speculative and psychological. They're driven by narratives and herd behavior, factors that don't adhere to fixed rules. That's myth. So that's why it's a lot easier to buy a bottom and sell a top, because bottoms are predictable and tops are not. Now, as you're doing your daily checks, the way that you know to buy is you basically are searching for confluence, because all these tools by themselves, as you saw, are really not that great. They're not going to perfectly tell you where to buy or sell. But when you use them together, that is where the true power comes in. And that's why the single most important part of every decision to buy or sell is whether there is confluence amongst the data. How many different data sets do you have pointing into the same thing? Confluence refers to, like I said, multiple data sets saying the same thing. So for a bottom to be in, I like to see at least 4 or 5 good data sets indicating that there's a bottom, okay? And so for the last crypto bottom, if we go over here, this was in my mastermind on April 12th. I basically said to everyone, I think it's highly likely that the bottom is in. This was at 82K for Bitcoin. And I gave 5 different reasons. I want you to look closely at the reasons that I gave, and I want you to see if any of these reasons that I gave are in the list that we just went over. So M2 growth, this one is not on the list, but this is just another good data set you can see here. M2 growth was ticking up with a 12-week lead. Bitcoin was at the bottom. Strong bids at the 75 to 80K region. So that's that data set here that I was showing you guys earlier. 30% retracement, sustained negative funding regime. We went over the funding. RSI bull div on one day. So 4 of these I just went over, and I just used them in this sort of message here a month ago to guess the bottom correctly. So you can see that it actually works. Once you've got confluence pointing towards buying, the next step is to buy near the bottom, because there's been a few times where my Hunter algorithm system called a bottom and I didn't buy out of fear that prices were going to go lower. That's happened quite a few times. It's actually quite frustrating, because the thing that I've realized is that with bottoms, the goal shouldn't be to buy the bottom. The goal should be to buy when the upside is asymmetric, when the bottom is close or getting closer. Because the closer the price is to a bottom, the more it's going to feel like the price is going to go a bit lower and that you should wait. Because that's why price is able to get that low, because everyone's scared. They're thinking that it's going to go lower, and it never goes as low as everyone expects. And this is probably number one reason why it's the hardest part of buying near the bottom. It's being able to action it even though it feels wrong. You feel like it's going lower, but you have to ignore that, because data alone is actually not going to save you. I've given you all the data sets here, and maybe you think, oh, I've got the data, now I can make money as an investor. Well, not necessarily, because this data, most of it is available for free online. RSI is free, 30% retracement's free, the funding data is free. Only a couple things that I showed you cost money. I think if data was a solution to making money as an investor, you'd probably already be a millionaire. Everyone would already be rich. The truth is, data is actually only 10% of making money as an investor. The 90% that I haven't covered in this video that you will need to learn is about emotional management, portfolio structuring that goes beyond what I just talked about, risk management, a level of diversification. There's all these different things like patience, discipline, and then there's also the element of intuition. You're not going to get that unless you've been doing investing for a few years. And so this is basically the 4 steps that I follow to buy. we just went over at the start. You build a portfolio, Bitcoin and things that can outperform Bitcoin massively. You check the market daily using the 9 things that I just went over. You wait for confluence. When you have confluence, you buy. You don't try to buy at the bottom. You try to just buy near the bottom. And that's it. It's pretty straightforward. Now, if you're wanting to learn about the other 90% of what goes into being a profitable investor, I've actually put out a 4-hour video course over here that is completely for free, and it's going to teach you the other 90% if that's what you're interested in learning. I recommend going over to this video. You'll find a link in the description below. But thank you again for watching this video. I appreciate it. I'll see you in the next one. Cheers.